very good morning. You're watching Buy Now, Sell Now on ET Now, a show where we are going to be taking all your live queries via WhatsApp, via live calling, and get them answered by our experts to help you shape your portfolio better. Before we do that, just talking about the listing of the day, and one of them is Shankesh Jewellers, listed on NSE with an uptick of about 11%. That's the kind of premium we've seen, and the stock is holding on to gains. We've got the management of Shankesh Jewellers joining us on the show, Mr. Mahavir Jain, the whole-time director at Shankesh Jewellers, joining us. Mr. Jain, good morning, and first of all, congratulations on your listing. And now that the company is listed on the bourses, can you share with us the kind of growth that you're penciling in on the top line for FY27? Can we assume it to be in high teens?
Hi, good morning, and thank you very much for having me here. First of all, I'll take this opportunity to thank all the exchanges, the BSE, NSE, SEBI, our investors especially, who has shown this trust in us, and we've got listed today at the Bombay Stock Exchange and the National Stock Exchange. Yes, we have been continuously been in focus with handcrafted jewelry, and with the same we'll carry on forward in the coming future as well. So let's see where we see a good growth coming in the future as well.
Quantify that growth for us, Mr. Jain. Would that growth be in mid-teens? Because since last year in FY26, you did grow at a range of about 15 to 16%. Can we expect to see this mid-teens kind of growth continue? Can we expect higher teens?
So yes, as we move forward ahead, this growth, we expect it to continue at a better rate, and we've been growing all these years as well, so we expect the growth to continue in the coming future as well.
So now with the business catering to large organized jewelry retailers, how do you see customer concentration evolving, and what really is the opportunity to add more marquee clients?
See, obviously, India is a very big market for jewelry, and I would say that I'm a very small part yet to cater all around India. But as we can see that all our retail chain partners are growing at a pace, and they've been increasing the number of stores day by day and increasing their presence all around India. A customer from Maharashtra is going to South, South is coming to Maharashtra. So obviously when we cater to them, we see the growth coming into us as well, because we supply them with our jewelry, what we make daily, because our design focus is totally on handcrafted, and that's the need of the hour today.
Understood. So that expansion is going to be aiding your business as well. Mr. Jain, I'm once again coming to the financials, just trying to understand your EBITDA margins. We've seen very sharp expansion from FY24 to FY26. Currently at about 9.5% is where your margins are. How sustainable is the current margin profile, and what could drive further margin expansion from here? Would FY27 margins by any chance cross 10%?
See, technically talking about the numbers here, I would say that our focus has always been more on the design focus and our customer service focus, and scalability has always been the focus. But when we go about numbers, gold prices have always helped us in getting some portion of these numbers. So let's see that these numbers stay intact in the coming future as well.
All right, Mr. Jain, since you mentioned gold prices now, they do continue to remain volatile. Are you seeing any change in jewelry designs, carat mix, order sizes, or even perhaps, consumer demand from your customers?
Yes, indeed, we've seen in the last 3 years, if we see that our 18 karat growth has almost grown to a humongous percentage, because with the current gold prices increase, and Shankesh Jewellers was always ready in advance to be developing our handcrafted designs into 18 karat as well. So we got the first mover advantage in the market as well. So our growth has been good, shifting from 22 karat to 18 karat in the last 3 years, and in the future as well we see 18 karat growing towards a handcrafted jewelry.
Understood. And Mr. Jain, a large part of your IPO proceeds is going to go towards reducing your debt. And once the balance sheet is deleveraged, how much will the debt on the books be? And then where do you see the biggest opportunity to deploy more capital for growth?
So technically, yes, we will first do the repayment of our debt, whatever's there in the books for now. But whenever in the coming future, the company is needing some more funds, there is always a space to get in the debt again. But and right now, as the working capital requirements also, you see, they've been increasing day by day. So those gates are always open for us in the future as well.
All right. Now, Mr. Jain, what is really the opportunity that you have to expand beyond your current pan-India customer base, particularly into newer regions, or or perhaps looking at export markets?
So right now, if I say India is a huge market, as I said you earlier as well, that India itself is a great consumption of the kind of jewelry what we make in right now. And talking about the customers what we have today, the retail chains do have showrooms outside India as well. So we can say that we have some presence outside India as well, because that jewelry is being supplied to those chains as well. So right now it's an indirect export. Let's see what the future brings in for us.
Okay, and here's watching out for that as well. Lastly, Mr. Jain, how much headroom do you have to scale your manufacturing capacity? Are you looking at any capacity expansion plans anytime soon?
So as we talk about handmade jewelry, it needs a lot of new minds to make it, and it needs a lot of different hands to make it. So we've always followed the asset-light model, what we follow, and working with contract manufacturing. So that's what we see in scaling that only in the near future also.
All right, Mr. Jain, appreciate your speaking to us on the listing, and congratulations on that listing. Thank you very much for being with us.